Upgrade your Portfolio Builder subscription today. Free bonus, 1 free month in our $10,000 income trading boot camp. You want to learn how to do what I do? Take the boot camp. Profits in 11 of the past 12 months. Largest drawdown in a single month is 1%. How much drawdown has your portfolio had in the past 12 months? We have a ratio of $15 of profit for a risk of $1 of loss in the past 12 months. That's extremely hard to beat. Never lost capital over a 90-day period. We might miss out on some of the S&P 500's moves, but we are playing it safe and we've never lost capital over a 90-day period of time. In December, when the stock market crashed 16%, we generated 1% return. In May, when the stock market crashed 7%, we delivered 2.2% return. In August, when Trump surprised the market with tariffs and it crashed 6%, we delivered a 0.8% return. In fact, the only loss we've had was in July, and I was predicting Trump was about to raise tariffs. If he had, we would have made 2, 3, maybe 4% in July. Daily income trade alerts at noon Eastern. Trade allocation per $75,000 is 100 shares of the SPY ETF Monday, Wednesday, Friday. Emerging Markets ETF Tuesday with 200 shares. TLT on Thursday with 200 shares, and GDX also on Thursday with 200 shares. Target income is $750 a month per $75,000 invested. A lot of our members are millionaires. That's when this program really makes sense. You don't care about trying to get huge gains. You just want super safe returns with low risk. So again, our target income is $750 per month, or 1% a month. Our average return is 1.25% per month. And if you want to make this more aggressive, take advantage of the cheap money your broker will give you. If you have $100,000 in your account, they'll let you trade $200,000 at a very low interest rate. And because this is such a safe strategy with option callers protecting all 4 ETFs at all times, you're not going to ever be in a situation where you can really get burnt. Now, we also adjust the strategy depending on what's happening in the trade war. When it's up in the air, we want to be long the SPY Emerging Markets TLT and tight on gold. And that's because we have low interest rates headed towards zero, low inflation, allowing the Fed to continue lowering interest rates and buying up QE. That's the ingredients for a bubble. Now, I like GDX when there's fear added to it. That's why in an escalating trade war, we can use our option callers to profit from the SPY and emerging markets going down while owning the ETF. That's what's so important. We're actually going to be the landlord leasing out our property to call option speculators, and then we're going to take the other bet and buy an expensive put option for free with the call option we've sold. It's beautiful. It's the only safe way to benefit from a down move with a very safe strategy. Just buying put options outright is super risky. You can lose all your money. With this method, we get free put options by selling a covered call. Meanwhile, when the trade war escalates, you can bet your bridges the TLT and GDX are going to fly up. Now, the other strategy we have to be ready to put on at any time is de-escalation of a trade war. Eventually, the two parties will most likely come to terms. Otherwise, they're going to derail the global economy. It's just that simple. We're in a crazy game of chicken. Who knows when this de-escalates? It'll probably go back and forth between these three for the next decade as two major powers battle for world supremacy. When we're de-escalating, stocks like SPY and emerging markets should fly up. We want to be long. That's why we have the plus sign. And our bond market and gold market's going to be in a short-term problem. So we'll short those the same way. These are the three strategies we use in the options market to profit from an up move, flat move, or side move. If we use a bullish loose option caller, the options will reduce profits. Those options will lose money but provide protection, and the SPY ETF delivers the profits, or whichever ETF we're long. If we use a neutral tight option caller, we can profit if it goes flat or up, but we lose much less if it goes down. And if we use a bearish inverted option caller, the underlying asset will show a loss, but because we've sold an in-the-money call option and bought an in-the-money put option, overall you can make a ton of money betting down on an asset while owning it. So this is our secret for safely profiting from the collapse of any one of these ETFs. Our simple 4 ETF portfolio is extremely diversified and all you'll need for your retirement. The SPY ETF has 500 top American companies, and the Emerging Market ETF has 1,000 top emerging market companies. This is excluding Japan, primarily China, India, Russia, and all of their trading partners. Gigantic companies over there that are the size of many of the top US companies. And again, our goal is income and safety, not growth or speculation. You can simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. So upgrade your account now. Click the link below. We're going to have a short application for you to make sure you're qualified to get the best results with our program, and then we'll let you on board and get the free bonus, a free month in our $10,000 income trading bootcamp. Here's our disclaimer. Please pause this if you'd like to read it in detail or visit the link. Otherwise, we're waiting for you to click that link, fill out a short application, do your interview. If you qualify, we're going to let you into the program, and you can be live with over 150 members so far. We're looking to grow this to 1,000 members in the next year and then cap it off. So get in while you can, and I hope you enjoyed this video.